It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat. It's not wrong, and it's certainly no different today than it's ever been. 1901, 07, 29, 1937, 1974, 1987, Jesus, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves. We just react. And we make a lot of money if we get it right.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. What an exciting time to be in the marketplaces, guys. Lots going on in both the markets and politically, which is being priced into the markets. 15 days away from the U.S. election, November 5th, and what's happening? The Trump trade being priced in. Volatility in the marketplace. Trump is leading in the cumulative national polls. It's being priced into the marketplace. Guys, my prediction is you're going to have a red sweep. I think America comes back to its sanity, and you're going to see a big electoral college landfall come November 5th. Now, we need to talk about a specific cycle that has been playing out every single election, the election crash cycle. I'm going to show that to you in the charts. But as you guys know, let's just recap. We got a couple hundred new subs in the last couple of weeks. Guys, oh, by the way, some house cleaning. We just passed 4 million views, I think about a month ago, which is awesome for a little channel like ours. So really appreciate it, guys. Be sure to subscribe and click the thumbs up. But let's talk about what the narrative on this channel has been all year, the GFC cycle since somewhere around the spring of 2024, right? We got on it early. We talked about the summer top and drop. We got the big 10.5% retracement. I told you the market would rally back up, predicted the rate cut of 50 basis points. We got it on the exact same day as in 2007. And now you have the market rally, and we're at a key inflection point. But I want to show you a mini cycle that plays out all the way back to 2000 in the charts, the election crash cycle. You could view this as the market de-risking ahead of the event. Now, how many times has it played out going back to 2000? Every single election cycle. So this is why you need to pay attention to this. How would this marry into the GFC cycle? Well, quite simply, remember in the GFC, we made our top October 11th, 2007, and then we got our leg down, and then the rally back up that failed, lower high, and then capitulated. The S&P fell 57%, bottoming March of 2009. That's how it can play in. But here's the alternative to that, right? I know a lot of people, a lot of you guys, a lot of people in the Discord that we have talking about, hey, but there's so much liquidity. What if Trump does win? Wouldn't the markets be excited? Wouldn't we get a rally? I think we're going to get a rally regardless after this pull down, okay? The question is, does it take out the all-time high? If it does take out the all-time high, we're going to look at that possibility too in the charts, and then where would it get to? Because we didn't reach our harmonic targets on the S&P, as you guys know. 6,100 was the top end of that target. So we need to be aware of all the possibilities. Regardless, I think we're going to get a pull down. I'll show you the percentages in the charts just off the top of my head. In 2020, guys, for the election, we fell 9%. Okay. And we did that in 2 weeks. We have some red, some selling pressure today. NVDA holding up the marketplace. So we're going to look at the global equities. We're going to look at Bitcoin as well in this video. I'm going to give you guys all the important numbers you need to see. If you guys like this information, definitely consider checking out our Discord. You can join right there at the join button on YouTube. Try it out. I think you'll really enjoy it because it's a community of people just like you that want to profit in the mayhem of the marketplace. All right, Lee, without further ado, let's start the show. Guys, if you want to trade these markets, check out SimpleFX. A huge tournament is starting, I think, on election day or the day before, like November 4th. I'll have more details. I'll pin the registration link for it right in the YouTube comments, especially if you live outside the US. There's no reason to not be on it. Up to a $5,000 instant first-time deposit bonus. All the information there on our link. Check it out. You can trade equities, commodities, Forex, and of course, cryptos. So let's go ahead and start this off. So what I want to talk about is the election crash cycle, guys. What is the election crash cycle? Is anybody on YouTube talking about the election crash cycle? Probably not. I don't know. I don't watch YouTube TA. But let's look back at what historically the market has done the last 6 election cycles. If you look at 2020, you went down 9.5%. This started October 12th. This is a 3-day chart. You bottomed, you fell 9.5%, then you rallied back up, right? Obviously, this is the stimulus time post-pandemic. Is that an outlier? 9.5% pullback? Well, let's go back and check some more. Let's look at 2016 when Trump beat Hillary. So this time we fell 7.44%. This is S&P futures. Starting on August 16th, this retracement started earlier. When did we bottom? We bottomed after the election, November 7th. Actually, that's good to know. When did we bottom over here? We bottomed just at October 28th, and then you started to kick back up here. Actually, that next candle, the up candle is a 3-day chart, sorry, November 2nd, okay? So we had this pull down right before the election, and then in this case, we had the pull down last till post-election, 7.5% pull down. What about if we keep going back? 9% drawdown. This is the 2012 election. And in 2012, we had a 9% drawdown, which started on September 13th, and we bottomed November 15th, again, post-election. Do you see these numbers? 9%, 7.5%, 9%. What about, now we're back in 2008. So this is going to kind of throw the averages off, okay? So if we just look at it from this up candle, September 17th, because we had the election November 5th, 2008, but that was your last up candle and you fell 48% and you didn't bottom until March of 2009, right? So you can see this here. Now you did get a temporary bottom, November 19th, you rallied back up and then you capitulated. So again, really this is the outlier, but as you can see, every single presidential election cycle, we get a big drawdown. This is the smallest drawdown, and you have to go back to 2004. October 5th, you started selling off, 5% drawdown, your up candle just before the election. Let's go all the way back to 2000 to finish this off, and just like with the GFC bubble cycle, big drawdown, right? So if you look at this from September 1st, your last fractal high, you had a capitulation event, all the way down to December 20th, 18.5% move. What's the story here? The story is every election cycle from 5% to 50%, you've had a drawdown in the marketplace. And if you look at recent history, 9%, right? You look at recent history prior to that, 7.5%. I think, to get an election sell-off. So we're going to look at this here on the charts on the weekly time frame to get an idea of where this could go. 9.5% last drawdown. If we look at the S&P, it's still hovering up here. Look at this vertical ascent up. The important thing is when you're looking at your chart is to find a divergence. Let's go ahead and put this on the weekly. Okay, let's look at this on a weekly time frame. I want to see how much of this leg in a large time frame like the weekly is actually been divergent from my indicators, okay? Because this is your top, your parabolic top for now. So let's look at this. And if you look at this here on the money flow, which is a volume weighted RSI, these are our market makers indicators. These are free when you join our Discord, by the way. You can see you've been divergent this whole rally since right here, money flow peaked out. So when's your first significant high? Right here, April 1st, and then your April low, April 15th, okay? You can see this as well in the momentum. If you look at the momentum, same exact thing. You look at your momentum here, divergent the whole rally up. So we know we have this divergence for this leg, this up leg, which is why you're getting this volatility, these corrections, these pump back up. So let's look at this from a Fibonacci perspective of where this could go to if we get the election crash cycle pull down. Okay, then we'll talk about what happens afterwards, but let's think about the pull down for a second. We know this April low is significant, right? You had the divergent start before it. Let's pull us up to your current all-time high. Now, when you look at this, look at your 618 right here. Look how the wick landed beautifully here. 5331, 5,331. Let's add the 50% retracement fib on here as well. Put this on here. Let's get some measurements. If this is our top right now, which by the way, guys, in case you didn't notice, remember our prediction about the pivot top? We had October 2nd. What happened? September 30th, the market fell. The market topped, I should say, September 30th. The market fell 100 points and held that high all the way for almost 2 weeks. And then I told you, watch the October 17th pivot. That was last video, but I talked about it over a month ago. And what happened? We made an all-time high. We'll look at that zoomed in on the daily. And currently that is our intraday all-time high. Now, if we just come down 8%, you're looking at 5,445, 477 S&P points. If you come down to the 618, you're looking at roughly a 10% drawdown, 591, let's call it 600 S&P points to 5,331. Significant because look at your support levels. Key support level, we'll look at this zoomed in on the daily. Your key support level is going to be these fractal ranges over here, 57.21. You can see this high held, and you can see you bounced right off this level. 57.21 is going to be key on a weekly time frame. You'll lose that, guys. You're coming down to these lower levels, and I think you're going to get this pull down regardless. Okay, maybe it's just a 57.21. Maybe it's a shallow retracement, but I think you're going to get a cool off period before the election. That election crash cycle, which has happened not once, not 3 for 3, every single election going back to 2000. Now, does it have to happen? Nothing has to happen. This is what we're looking at with Fibonacci, with pattern predictions, and with cycles, right? So that's what I'm looking for is a drawdown. And I think those likely targets are 5,445, 5,331 would be a very nice move down. Let's look at this on the daily. Where's the problem that we're having right here? Where's our resistance? Our equidistant signal waves, 15.25%, give us a beautiful ABC off the April low, right in our reversal zone. We got all the way up to 59.27 on the 17th, right? The all-time high intraday has not been taken out. So it's only been a couple days, but that's currently your high. And you're struggling. You're holding support right here at 58.77, literally as I'm making this video. 58.77, which is a 100% move from the pandemic low. I'm sorry, from this, where is this 100% move from? Now I don't even know. Where is it from? Oh, it's the ABC right here, 58.77. The smaller ABC, the larger ABC takes you up to that 6,100 level. So this is what you're holding. You're holding the support. You got above 58.77 and you're floating on it right now. If you break down below it, let's look at this on a clean chart. You break down below it, you want to watch 58.15. Why? Because you had a Wyckoff sideways range here that you broke out from, and that's your fractal high range at 58.15 level. If you break down below 58.15, there's that 57.21. Here's your beautiful W pattern. You got up to the 1272. You got up to the 1272. What significant event did you have? The supermoon on the 17th. The closest the moon will be to the Earth for the entirety of the year. You also had 4 planets visible. You had a comet in the sky. It was also a near lunar eclipse. Again, lunar cycles, celestial cycles, part of timing when you're looking at the market going into euphoric peaks and when you're looking at the market making lows. Okay, it's just a confluence factor. But it's holding up absolutely beautifully right now. 58.44 is your 1272 fib off the W pattern with the high in that range going to 6,092. Now, why was I talking about, if this plays out still as the GFC? Always being aware of both possibilities. That's my basis. That's my core thesis, plays out like the GFC. But let's say we get our pullback. Let's say we get that pullback at shallower 57.21. Actually, it doesn't matter. 57.21, 55.92, somewhere in here, we get a pullback. and we come back up. The way you will know if this is playing out like the GFC or not is what happens after the pullback. We get our pullback. Does it come back up and make a lower high on a euphoric rally? Let's say Trump wins. Let's say the markets love it. They rally back up. Does it make a lower high and start to capitulate back down? That's the GFC cycle. You made the exact same wave back up. You got a leg down, wave back up. If you come up and take out your all-time high, I don't think we're trading on that GFC cycle, and we're moving towards our harmonic expansion targets of 6,100. Okay. That's what I think is happening. But this is too far ahead still to predict this. We don't even have the pull down yet. You look like you're going to get some sort of pull down prior to the election. And I think it's going to be in that 8 to 10% range. But right now, you're still holding key support and you're holding it well. Right? Maybe it takes a catalyst. What is that catalyst? Well, right now, NVDA is holding up the marketplace. Let's look at some more charts. You look at the SPY. Where's the SPY in trouble? Get below 580. There's your 1272. You can see you're using it as support. You can see you bounced off of it. Where's that SPY expansion? If the S&P was to move up to that 6,100, 6,000, you're looking at the SPY at 600 to get to this harmonic expansion target. But just like the S&P, I think the SPY is going to come down and retrace prior to the election. 574 is a key support level. You lose that, then start looking at your levels below. 565 gives you these clusters of candles and then your deeper levels. Okay, so that's where you're at on the SPY. You want to stay above 580. 599 is that harmonic expansion target. You look at the Dow hit, for all intents and purposes, its harmonic expansion target, 43,607. The Dow got up to 43,578. It's at 43,187 right now. So you want to watch these levels, because where could the Dow get in trouble? If it comes back down below that 42.5 area, you come back down below 42.5, then you're coming back down with the S&P, with everything else. Right now, you have a nice move down of 300. I think it was like 390 points, 400 points earlier. You're at minus 334 right now. But this cluster of candles is going to try to provide you support along with this fib at 42.524, where it struggled. You see this? So if you do this move on the Dow, you want to see if you come back up for a double top, or if you can break that fractal and come up. And be aware, this move can come much deeper depending on how large of a retracement the S&P does. So let's look at the Dow really quickly. I know a lot of you like to trade the Dow. I like to look at the Dow. It's the baby brother to the S&P. So let's look at the Dow on the weekly, just like we did the S&P. Let's take that April low, right? There's that April low right here. So we'll get these fib targets to the downside. April low. Pull the April low up to your current all-time high. If we look at the 618, you're looking at 39,799, puts you back in this cluster of candles. The 0.5 fib at 40,521. And the 786 at 38,772. I don't think it would go that deep right now on this leg down. If it does roll over, I want to look at 40,000, 39,799, and let's measure this, right? We know the S&P fell just about 10% last election. This is a 7% move to 40,521, 3,000 points. This is a 9% move. Typically, the Dow doesn't sell off as much as the S&P. It doesn't rally as much as the S&P. So 3,764 points. These would be my two targets, 39,799 and 40,521 for a rollover, but you got to take out those key support levels on the daily time frame. Let's go ahead and look up at triple Qs real quick. Triple Qs struggling at the 1272, 495. You're at 493. NVIDIA is holding this market up, but you can see you're ping-ponging between 485, 495, just above it, and you don't know what to do here, right? Well, if you were to break out above that fractal high of roughly 500, then you want to look at 508. That was your harmonic expansion target. That's also a new all-time high if this does start to roll over. And I say if, because in 2007, the S&P and the Dow topped first. The NASDAQ ran up another 3 weeks after. So we have to see how this plays out, because in the election crash cycle, everything pulls down, right? And then it's that rebound up that determines the next cycle. That rebound up. Do you make a lower high or do you take out the all-time high and continue to move up? So that's what you want to watch. Downside 485. You want to hold that support. Upside, your upside target remains 508. You look at the NASDAQ futures, which is what I like to trade. We look at our lunar cycles, of course. We had back on October 31st, 2023, the bottom of the market, lunar eclipse, total solar eclipse, top of the market, nice retracement. And of course, now we had this super moon. This is our ABC, guys, from the pandemic low up to your November 2021 all-time high to your cycle low, your ABC target of 20,623, which I don't think you had a weekly close above that yet, okay? This is one of the only markets that I'm aware of that got to the ABC reciprocal move. It got there. Why? Because Mag 7 led the markets, but that's where you're struggling. Look at your uptrend. Look at the gigantic W pattern. You print it on the weekly or the 3-day chart. It's also on the weekly time frame, but that is where you're struggling. So let's look at this zoomed in. We look at this zoomed in. Actually, let's go back and do this. I'm all over the place. Let's go back and look at these targets just like we did on the S&P, right? That would make sense. We're on the weekly time frame. Let's go ahead and put this on the weekly to be fair. See if we have that same divergence present. Weekly time frame. I mean, yeah, you had divergence on the weekly all the way since July 2023. I mean, look at that. That's crazy. July 2023, there's your money flow. And look at the money flow. Get that out of the way. Look at the money flow, this whole rally up. So this whole leg has been divergent, right? But just to keep it consistent, let's look at the momentum. It's the same on the momentum, although this last peak did take out that mid peak. But you have this momentum look at the divergence now. I mean, it's way down there and you're at an all-time high. All right, so let's keep this consistent and just pull it from April because I don't want to pull it from here. We'll pull it from April. So we'll pull it from April. The fib that is the April low, just like on the S&P and the Dow. Go up to your all-time high. Where would this election crash cycle retracement take you? If the NASDAQ wants to roll over, right? NVDA keeps moving up to our 149.99 target, then it's going to be floating, right? It's the largest company in the world. But let's just look at this. So from current price, right, today's candle, this weekly candle anyways, to come down to the 0.5 fib at 19,048, 7.37%. To come down to the 618, 9.5% at 18,591. And that's also basically the base of your W, okay? So that would be the two levels I would be looking at, the 0.5, the 618, just like on the S&P, doesn't have to come down this far. Remember, NASDAQ in 07 stayed stronger, so you could stay stronger, but those are levels I'd be looking at. 19,000, 18,600 would be the two levels for the retracement. But when you look at this zoomed in on the daily time frame, you have your beautiful W pattern. Now remember, my W goes up higher, right? My W, to get that harmonic expansion from this leg from wave 3 to 4, I'm looking at 21,067, and you're just going sideways on the daily time frame, 20,448. You're basically stuck between 20,002 down here at this fractal and 20,623. There's that 20,623. Would like to see it make a new all-time high, but it may not, especially if the market's pull down for this election cycle. Okay, so you want to keep on top of that and pay attention to that. Looking at your support structures just beneath you. If you lose that fractal 20,200, you're coming back down to test these lows. These lows line up with these highs from wave 3. So let's just throw this somewhere right there. You can see all the wicks, the demand wicks, 19.9. Okay, you lose 20,002, you're coming down to 19.9, and then you have the deeper targets based off that weekly time frame, based off the larger time frame divergence. If we look at the DAX has this beautiful ABC. This would have been the second market to hit the 100% move, large ABC from the pandemic low, and we got within 200 points of it. 200, 300 points of it on the DAX, basically a single daily move on the DAX, day and a half on the DAX, and we formed the W pattern. We have our Wyckoff structure. On the DAX, the levels you need to pay attention to, if you lose 19,540, you're at 19,595. You can see it right now. You're going to come back down and test this base at 19,020, okay? And that would be this move, your Livermore pivot. If you can hold that base, it's all going to be about the rebound, guys. After this retracement across the indices, it'll all be about the rebound. post-election. If you do sell off for the election crash cycle, the retracement, especially if it's substantial, 8%, 10%, 7%, it's going to be about that rebound. Do you rebound up? Take out the all-time high, go to your harmonic expansion targets, 20,200 on the DAX. Do you hit these targets, or do you roll over and start to capitulate just like the GFC cycle? Okay, so watch those levels on the DAX. If we look at the Russell, still forming our giant ABC pattern. You're hung up at the 786 fib, 2,284. Try to get above it again, selling off again today. The level above that, 2367, to see if that holds for the nice double top. And if the Russell starts falling down, you want to watch 2,146. You've built a base right there of candles. It's also the ceiling before you broke out to the upside. So basically, you're at 2,255. This is a weekly chart. Haven't been trading the Russell since this move, this leg down. But what we're looking at here is just see if it holds up in this area. That's the Russell, guys. You want in-depth Russell, join the Discord. I'll be happy to break it down in a video for you. Looking at the HSI, the Chinese market, everybody's so bulled up on, nearly at the GFC levels for retracement, formed a beautiful Wyckoff pattern, right? And you formed a beautiful W. And what did you do? You got your up thrust, you're selling back off. The level you want to hold there on the 3-wave is 19,772. You already bounced off it once here on the weekly time frame. Because why? Because you're doing this move. If you can hold it, you're going to come back up. Can you take out that fractal from the wave 5 and move up? Get on top of the trading range, pull back, and this is where you get your Livermore pivot. You either make a lower high or you take out the fractal and you continue up in a bullish uptrend. This is all artificial. China's economy is in a recession. This is a move based off stimulus, which my bias is that it's going to fail as we have a global recession kicking into the marketplace. You can do this type of move, okay? But be aware, that's what I'd be looking at there on the Hang Seng, because if it takes out that 19,772 after it holds for support and does this, if it makes a lower high, then you want to watch these lows because that's where you're coming back down to. Let's go ahead and move forward. NVDA, this is what's holding up the market. 141.20, new all-time high. It can close up here. You'll be at a new all-time high. My harmonic expansion target based on the W, we've been talking about it for weeks, 149.99. This is holding up the NASDAQ. It's helping to hold up the S&P. And this is what's the biggest company in the world right now. So you want to watch this, $8 away from that new all-time high, harmonic expansion. See if it can get up there. See if it can build a top. The rest of the market can still sell off. It just won't be as dramatic unless the biggest company in the world pulls down some. Okay, so you're going to watch NVIDIA. Key level to hold is 131. You built a base there. It's also the top of your wave 3. If you lose 131, there's more downside ahead, and that'd be really, really bad for the markets if NVIDIA did that. Let's look at Bitcoin, because on a weekly time frame, our ABC we've been talking about gives us 80,804. Now, something to pay attention to is, what about the election crash cycle for Bitcoin? Well, look at it over here. Here you are on the weekly time frame. Let's just go to November. Right here, these candles right here, you didn't pull back here on Bitcoin, okay? You kept moving up for the election. So it didn't behave with the markets. It didn't behave with the markets at all. Now, this, I was going to go back and look at the other election cycles further back, but most of the charts, I think Binance and everything, Bybit even, they all stopped before 2016. And I think that's important to understand. The crave, the rave in crypto has really all started just before the pandemic. With the pandemic, all of the various exchanges that came out and whatnot, the marketplace has changed dramatically. Doesn't mean it's going to continue just like it did in 2020 to rally up, but you got a little bit of a pullback today. So you see the markets were moving down. Bitcoin was struggling. And you guys already know we have the ABC, we have confluence here from the all-time high to your corrective low, the 1272 right there at the 80K. 1618 would be 89K. Bitcoin can pull back. You want to see it hold 64,333. It's at 67. Let's look at this on a daily, get some better information here. So we had our channel we finally broke out of. And again, where'd you get hung up? The 786 fib, right? It's a killer. 68,512. So let's just suppose for a minute we get this election sell-off, pre-election sell-off, or with the election, looking for this pull down, right? 8 to 10% in the S&P. Let's say we do get this pull down. Well, the level you want to hold in Bitcoin, 65,481, right? So 65.5 is a key level to hold. Now, let me show you something here with Bitcoin. Whether you hold that level or you come down to that 64 level down there at the 618, let me show you this, okay? Because this is a really important concept to understand. If we get this retracement in the S&P and we get this sell-off in the markets and you see all the markets come down, that 8% level, 10% level, nice strong retracements in the market. And if you see Bitcoin not continue to rally, but also retrace, let's say it comes down to 64. Guys, it's this move, the next move up. That's the ball game right here. If you can take out the high, if Bitcoin does keep retracing, if you can take out the high, there's higher highs ahead. If the markets fail to take out their high, especially the NASDAQ, you want to see what Bitcoin does, because if it starts to turn, that's potentially a massive trade for a big sell-off, okay? I'm showing you this because you've done this pattern over and over in this cycle. Look at this. Here's your giant ABC. You're a three-wave top. This is a double top. You see that structure? You did it over here as well. You did the giant ABC pattern, your double top. And look at these moves, guys. When you measure these moves for these double top trades, 26% move, right? 18,000, almost 19,000 points. These are big moves. What about this one for the double top? This was a big 30% move. So 26%, 30%. Big moves here, guys. This move right now Bitcoin's doing doesn't scare me at all. What you're looking for is it to hold a support level and bounce back up, and then, of course, take out that high that it made, 69,573. So even if it comes to here, let me illustrate this with some waves just because it's cleaner, right? So here's your ABC, right? So you can see this move right here, right? Here's your A, here's your B, here's your C. Double top, right? Let's get rid of some of this stuff so you guys can see this. Here you go. ABC. Same thing over here, right? This is ABC. Double top, false break double top, where you get made a new high on your second level. But this is ABC, capitulate 26%, 30%. This move here is key to watch. This structure right here is key to pay attention to at that 65, 66 range, because Bitcoin can easily do this. And it can hold this level. We'll see if it holds it, but it can do this, right? It can come here and then come back up. And this move is important. Does it come back up and take out that A wave and continue to move up and challenge these highs over here? Or does it just come back up, make a slightly higher high or slightly lower high and do what it did over here? ABC move, 30% drop, retest the bottom of the range. We're going to find out very soon. Let's look at this. Yep, 28% drop to retest the bottom of the range. So watch this range. Watch the move. This is your first wave up, wave down, see where it bounces from 65 or deeper, and see where it bounces back up to. Going to be key for setting up a very successful trade. My bias, once again, is that Bitcoin can hold up in this range. It's been making excellent progress on a reversal, is to come up to that 80K range. The NASDAQ completed its 100% move. Bitcoin, I would like to see complete that 100% move as well. This move here will tell us a lot. If it starts capitulating and coming down dramatically, then you're setting up for one of these large, massive three-wave moves, right? If you can hold right up here, 65, 66K, it's not a big move at all in Bitcoin. It's a few percent, guys. Not a big move. Hold up in this range, see what it can do. If it can keep accumulating, cool off, and then break back out again, right? So let's go ahead and look at gold real quick. We've had the gold target long standing here on the weekly time frame, 2820, the 1618, new all-time high intraday, at least for gold, 2820. Blow off top, I guess you would say 3,000. Remember, gold and silver ran into the spring equinox, even though the markets topped in October and November in 2007. They ran into March 2020. I expect them to do the same thing. Run up and then pull down and then parabolic rise, just like the explosive blow off in 2011. Okay. So we're going to look at these targets as we get some more price action. I covered all this information in the Discord of the metal cycles as well, the commodity super cycle, when it's coming and what's going to be involved in it. But looking at the 1272 here on the weekly on silver, that's what we got up to 33. We broke out. Here's your Livermore pivot right now, right? There's your Wyckoff range, your high, your low. You struggled here getting up thrust, but eventually you broke out. You took out the fractal. You're sitting on top of 33. Next target's 37. If you can take 37.90 out, then you have 42 up here. We'll see what this does. You had a nice explosive weekly move up here. See if you can hold above 33.55. Silver has been underperforming. Everybody knows. No shock there. That's just the way it's been working out. All right, guys. Look forward to talking to you on the next video. Leave me your comments. I reply as always. Consider checking out our Discord with the join button. Message Lee and Telegram if you have any questions, and enjoy this fantastic trading week and hopefully fantastic weather. Take care, everybody.